And the conversation about KPCs, this is a mature asset. Government is happy, to actually share that ownership with the rest of Kenyans, exit that particular conversation, which is a partial exit, I must admit.
Yes.
Exit that partially so that those proceeds could actually be reallocated elsewhere for purposes of development. So really, to summarize that, we have three objectives. We're very clear about them. And again, when you look at the timing of our market, we think that it couldn't have happened at a better time. Okay, looking at our macroeconomic environment, we are quite positive that our equities market has been on steroids over the past year. Okay, if you look at your 52 weeks or year to date, as we call it, we're talking about north of 55% return to equity investors. And why this? Because if you look at your fixed income market segment, inflation is low, so typically, the central bank has kept the rates low at 9% CBR, but we've also seen yield on the fixed income coming down. So what that means is there's a reallocation of investors actually looking for higher return. And then typically the equity market will be one such places. And when you bring an issue in such a particular time, not a bad, it's really, in terms of timing, it couldn't have been better. Again, our local investors, they're at 60%. We have 60% of local Kenyan participating at the NSE. Traditionally, we've seen a situation where foreign investor, would be at a higher ratio than the local. But this time round, we're talking about 60% local investors at the NSE vis-a-vis 40. The number keeps fluctuating, but then again, it tells us Kenyans are really, happy to participate in this particular issue.